Federal government welcomes Microsoft's offer to support Nigeria's economic sustainability plan. World Bank projects 5% growth for emerging economies in 2021. 874 microfinance banks have operational licenses, says CBN. Customs generate 1.6 trillion naira in 2020. Oil near 11-month highs on Saudi output cut pledge. Equities rally. This and more on Business Express, today reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Microsoft Corporation says it plans to partner with the federal government for the benefit of the Nigerian people, especially young people. Vice President Yemi Osinbajo noted in a virtual meeting with Microsoft Corporation team led by its president, Brad Smith, that the company's interest in supporting the efforts of the federal government is a welcome development and could leverage to address issues affecting the youth, especially in engaging them productively. Microsoft is now offering support for the digital transformation pillar of the federal government's economic sustainability plan. This will be a continuation of the technology company's investment in Nigeria after the establishment of an Africa Technology Development Center in 2020. The World Bank has projected a 5% growth for emerging markets and developing economies in 2021. This is contained in its January 2021 Global Economic Prospects Report. The projection, which says growth in emerging markets and developing economies, is envisioned to firm to 5% in 2021, but emerging developing economies output is also expected to remain well below its pre-pandemic projection. The January 2021 Global Economic Prospects Report projected a return to global growth, but stated that risks would remain as economic activity and incomes were likely to stay low for an extended period. The report also stated that although the global economy was emerging from collapse triggered by the pandemic, the recovery is projected to be subdued. The Central Bank of Nigeria says 874 microfinance banks have licenses to operate in the country. The CBN also recently revoked the operating licenses of 42 microfinance banks in the country effective November 12, 2020. As the official liquidator of the banks whose licenses were recently revoked, the NIDC said it was in the process of closing the listed banks and paying their issued depositors, and in consideration of the impact of the COVID-19 pandemic on economic activities in 2020, the CBN says it has revised the deadline for compliance with the minimum capital requirements for microfinance banks in Nigeria. The dollar held on its biggest gain in more than 2 months against its major peers on Friday as a rise in U.S. yields triggered some unwinding of bearish bets on the currency. Let's now see how the naira is exchanging for other currencies. And on the last day of trading for the week, transactions on the floor of the Nigerian Stock Exchange ended in negative territory. The NSE All-Share Index declined by 1.16% to close at 40,120.22 basis points as traders exchanged 333.3 million shares valued at 3.6 billion naira in 5,142 deals. Market capitalization stood at 20.9 trillion naira. Well, it's the end of the first trading week in the Nigerian stock market, and stocks are still sitting pretty tight up there despite a day of profit taking, a little bit of negative. What is driving this appetite at a time when major industries and sectors seem to be struggling? I have joining me from Lagos a chartered stockbroker, Charles Fakroga, to examine the upbeat trend as well as the negative we are experiencing this afternoon. You're welcome to the program, sir.
Thank you very much for having me.
Thank you so very much, Mr. Charles, for joining us. Well, like you just heard, the market has been positive, but today we are having a bit of negative. Can you tell us what is responsible for that?
Well, basically, we say that every market is dynamic, frequent buying and selling will prices to go up and come down, and that's what has happened today. And of course, you will also note that the speculators in the market, they are positioning themselves to take profit. So what really happened today is just a little bit of profit taking from speculators.
Okay, it's also been a week-long trading session. How are stocks looking like before this afternoon?
Yes, we know that looking at the build up from last year, we saw that the market was bullish and it's even unconnected to the policies of government where fixed income, money market instruments, the returns were very, very small compared to the equities market. And we see more and more people gravitating to the equity market. And that was why we saw the bullish trend even up to the end of the year 2020. So that is expected to continue for 2021 because the rates in the fixed income space and the money market are still not being reviewed. So investors that are rational, they also want to still continue to the equities market and get returns where they will meet their investment objectives.
Okay, is it a coincidence that Nigerian stocks were also this impressive January last year?
Yes, January last year, there was a lot of expectations. In fact, for every new year, there are a lot of expectations. New policy direction, the regulators will strategize, the regulators will strategize, a lot of things will be done. Now, but as you proceed in the year, the unforeseen circumstances, the environment that we cannot control will come into play. But if you have been prepared, of course, some people will be able to weather the storm, while some will not be able to them. So it is expected that the bullish trend is likely to continue for the time being.
With the negative recorded this afternoon, would you say the positive trend bubble has been ruptured?
I wouldn't say it has been ruptured. And like I said earlier, the market is a dynamic market. And it does not operate in isolation. People buy and sell on a daily basis. If I buy a share, in the 1st of January this year, and by today I see that there is a little increase, I'm expected to sell. Okay, so it's the people buying and selling that will result to price fluctuation and changes. And that also now gives opportunity for new investors to come in where prices are low so that they can also take advantage where prices are up and down. So I wouldn't say there is a pause in the trend. The market will continue to be bullish. Occasionally we will see profit taking depending on the positive direction and the macroeconomic environment, because the market is supposed to reflect the macroeconomic environment. So all these will come into play to see the market
riding on your submissions now, what would you say are the factors and equities driving the trend we've observed from the beginning, ending last year to the first week of this year?
Yes, we also note that leadership was a key factor in getting the result we had in 2020. We had a pandemic, but the regulators ensured that no trading platform is disrupted. Investors could still do their investment. The issuing company, that is the listed company, can still raise money. Activities went on normally, digitally. Even me as a trader, I'm trading from the comfort of my bedroom. I was able to take orders from my clients. I was able to sell to them. And at the same time, they were paid. So, trading market activity went seamlessly despite COVID-19. But that's why we have to give the glory to the regulators and operators. They did all they can to ensure that the market continues. For example, the stock exchange had to activate their business continuity program, which every stockbroker keyed into. And it became easy for us to trade from the comfort of our houses. And like I said, the corporate companies too were able to do all they intended to do from the comfort of their offices. So everything became digital, a new normal, and investors were impressed. And we began to see confidence into the market. You also now see that the number domestic investors dominated the market because the foreign investors were not really having so much confidence. But with the achievement so far in 2020, that the Nigerian market was adjudged the best in terms of return in the world.
Okay, Mr. Charles, with the picture you're painting now, what are the stocks to look out for?
Yes, the stocks to look out for every investor will differ, and it depends on the investment objective of each individual. So if you are an investor that wants to really be long term, I would advise generally that you do a little homework, look at stocks that have strong fundamentals, stocks that have the pedigree of paying good returns to their shareholders, and at the same time, look out for stocks that they produce services and products that meet your objectives. If I'm talking to a client that's of religion, I would say, okay, invest in companies that are not highly leveraged. If I'm talking to an ethical investor, an investor who believes that his money should go a long way to impact the world, I'll say, okay, these are the kind of companies we will invest. So they all the sectors are good to invest, but it depends on the investment objective of each individual and investor.
Okay, if you look at the market as of yesterday, Seplat closed 400 plus naira per share, which is highly impressive. And today we are recording a negative trend. Do you see massive sell-offs in the near term?
Okay, like I said, every individual investor have different objectives when it comes to the market. All these will play and giving us what we will see in the market. Now, the massive sell-off for Seplat, and for those who have made some substantive gains in investing in Seplat. So, and they have short term. They are taking their profits. Now, if the price comes down a little, we also have some other investors who are long in that equity, in that security. They take advantage of it, believing that the company has strong fundamentals, and you also note that most of these companies are going to be sending their numbers to the market, year end, in terms of
Okay, Mr. Charles, away from individual shares now, did COVID-19 in any way have an effect on the stock exchange? And do you see this second wave affecting stocks also?
Yes, I recall back to 2020, the COVID-19 had a negative effect on the market the first quarter of 2020. But like I said, leadership came into play. The regulators gave the guidelines. No platform should be disrupted. The stock exchange also did training for us. They were prepared. They did what we call the second data training. We were prepared. And after the first quarter, second quarter, third quarter, we saw the improvement. Now, this second wave that we are just experiencing now, the regulators and operators have the experience now. They will just activate their business continuity program. So even though there's going to be a total lockdown, we will get to the comfort of our bedroom with our digital device. We will stay in touch with our customers. We'll be in touch with the issuers. We'll be in touch with the market ecosystem. And trading will continue. Buying and selling will continue. Raising of capital in the market will continue. And we're going to see more and more innovation.
Okay, while we look forward to that, emerging economies, including Nigeria, is expected to recover faster, and we're looking forward to good recovery figures, particularly in this first quarter. What role do you see the stock market playing in stabilizing the economy this year?
Yes, so like we always been told, the stock market does not exist in isolation. The market mirrors the barometer of the economy. The regulators in the market, the operators in the market, and the corporate companies will do what they are expected to do. The market will be efficient, will be fair and transparent. Everybody will play by the rules of the game. Now, it's not left for the fiscal authority, the government, to also put policies in place that will encourage SME growth. And when these SMEs are able to function very well, they can affect the market for funds, increase their capacity, and we begin to see recovery. This can only happen if there is a conscious effort on the part of the monitors of the economy, the government, and all the stakeholders to ensure that things are done the proper way, policies are put in place, then we will begin to see recovery.
So that is to say you are very positive that stocks performance this year will be positive much more than the negative that we get to see from time to time?
Yes, we are going to see a positive capital effect. And like I said, this will depend on the cooperation from the government side in terms of putting the policies in place that will kickstart the economy, and the market will reflect that optimism.
Okay, Mr. Charles, I want to end this discussion by wishing you happy 21st wedding anniversary. We understand it's been 21 years. Congratulations. Business Express says congrats.
Thank you very much, sir. You guys are the network for Africa. In fact, the world.
Thank you very much, sir.
Thank you so much.
Thank you. You're welcome. Well, shares in Asia Pacific were mostly higher on Friday after stocks on the Wall Street cruised to a new record highs overnight. Bosedable reports.
Investors focus on a key piece of economic data early Friday as the Labor Department released its monthly jobs report for December. U.S. stock futures rose early Friday after another record-breaking session on Wall Street. Futures contracts tied to the Dow Jones Industrial Average rose 73 points. Those for the S&P 500 and the Nasdaq 100 also both traded in mildly positive territory. The move in futures came after the three major averages set record closing highs, including the Nasdaq Composite, which jumped 2.6% to close above 13,000 for the first time. The Dow Jones and S&P 500 rose 0.7% and 1.5%. Shares in Asia Pacific were mostly higher on Friday after stocks on Wall Street cruised to new record highs overnight. Nikkei advanced 2.36% to close at 28,139.03. Hang Seng Index 1.2% to close at 27,878.22, while the Shanghai Composite declined 0.17%. European market traded higher Friday as global investors anticipated that a democratic-controlled U.S. government will lead to greater fiscal support. It was a bullish start for Africa's market as most stocks were on the rise. Bossade Abel, Business Express.
The Nigerian National Petroleum Corporation (NNPC) says it has begun talks with trading firms to raise about $1 billion in a repayment deal to refurbish its largest refining complex at Port Harcourt. The development will mark Nigeria's second oil-backed financing since the COVID-19 pandemic that has added to the difficulty of finding investors as fuel demand is sapped by lockdowns and renewable energy is gaining ground over fossil fuels. If the financing is concluded, the long overdue rehabilitation of the refinery should reduce Nigeria's hefty fuel import bill. Oil prices held near 11-month highs on Friday and were on track for a strong weekly gain as Saudi Arabia's pledge to cut outputs continued to buoy market sentiment. Brent crude climbed 13 cents to $54.51 a barrel. It touched $54.90 on Thursday, the highest since February. U.S. West Texas Intermediate gained 14 cents to $50.97 a barrel. The contract closed up 0.4% on Thursday after also hitting its highest since February at $51.28. Both benchmarks are on track for gains of about 5% for this week. Gold inched lower on Friday as the U.S. dollar and Treasury yields firmed, although hopes for additional stimulus in the world's largest economy kept bullion on course for a second straight weekly gain. With that, we have come to the end of this edition of Business Express. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizX. Business Express returns Monday at 3 p.m. I'm Benny Adams saying, stay safe.